Hi guys, welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Wednesday morning, lots of cues to digest. Globally, of course, we'll be watching out for the FOMC decision that will be coming out later tonight. 25 basis point hike penciled in by the markets, of course. Our markets also consolidating below the 19,700 levels. Lots of earnings to digest. L&T, Tata Motors, and of course an earnings-heavy day as well, with 7 Nifty companies reporting their numbers. But of course, if you have any queries, send them in to us on our YouTube feed, and we will get your stock-related queries answered by our technical expert on the show. And over the next 30 minutes, lots of stocks to discuss. The investment strategy one should look at, the asset allocation strategy one should look at these levels. All these things to be discussed over the next 30 minutes. But before we do that, let's take a look at the top headlines at this hour. Big tech earnings drive moves on Wall Street. Google pops on a better than expected quarter while slowing revenue growth drags Microsoft. The Dow surges for 12th straight day as stocks continue to rally ahead of an expected quarter-point hike by the US Fed. Asian markets trade mixed while the GIFT Nifty is implying a slightly higher start for the Indian market. Meanwhile, oil hits fresh 3-month highs. Brent holds above $83 a barrel on optimism over demand as China pledges to stimulate its economy. The IMF raises India's FY24 GDP growth forecast by 20 bips to 6.1% from 5.9%. Now, this comes on the back of strong domestic investment and better than expected growth in the fourth quarter of current year 2023. Tata Motors reports a solid first quarter driven by a beat in the Jaguar Land Rover business, where margin expands and revenue surges 57% on a YOY basis. The company also announces the conversion of DVR shares to ordinary shares. So 10 DVR shares will fetch 7 shares of Tata Motors. L&T's first quarter revenue and EBITDA comfortably beat estimates, although margin misses expectations. The company's order book is now over 4 lakh crore rupees. The board also announces a 10,000 crore rupee buyback at 3,000 rupees a share and approves a special dividend of 6 rupees a share. And in an earnings-heavy day today, keep an eye out for first quarter numbers from Axis Bank, Bajaj Finance, BPCL, Cipla, Dr. Reddy's, and as I mentioned, 7 Nifty companies to report earnings. So an earnings-heavy day on the calendar. Let me then bring on board the first guest for today. Joining me is Brijesh Ali of IDBI Capital Markets. Good morning, Brijesh. Good to have you on the show. Now, the Nifty, could take support around that, 10-day EMA level. Right now, we are around that, 19,657 or thereabouts. But what would you say the Nifty level should be in today's session, given the fact that we've been consolidating below that 19,700 mark? We've made failed attempts to conquer this mark, but haven't been able to do so, given the fact that we have a slew of corporate earnings to digest. So the markets seem to be reacting to that.
Hi, good morning, Nandita. So the view on the market is quite positive. So directionally, the trend is positive. But having said this, there was slight profit booking which we saw in the early start of the week. So the maximum correction which was expected was somewhere close to 19,600 and maybe in the range of 19,600 to 19,500. So I believe yesterday what the low we saw was close to 19,615, and I think more or less the correction for the week is over. Bank Nifty is one which is not supporting the market. That is why I think the market is not moving one way. It's not finding the support as of now. The Bank Nifty has broken 46,000 levels, so that is the immediate support which it broke. So for today's day specific, I think yesterday's low will be protected. I don't believe that 19,600 levels will be broken down. I would wait for the first 1.5 hour kind of a trade to see if market sustains and gains some strength after the gap down opening or maybe a flat opening, and it moves above 19,700, then there is a high probability then we may see some kind of bounce in the market. So bias is positive. Buy on decline kind of strategy should be applied for the day is what I believe.
All right, the setup looks positive, and buy on dips is a strategy one should adopt. With that, hold your thought, Brijesh. Will come back to you. Let me also introduce our next guest for today, Mahesh Patil, who's the CIO at Aditya Birla SunLife AMC, joining in this morning. Good morning, Mahesh. Good to have you on the show. Before we talk about the asset allocation strategy one should look at, I want to get in your thoughts on the market, given the fact that we came very close to that, 20,000 level. But then, of course, we saw, the markets reacting to IT earnings and a slew of other earnings earnings as well. But do you foresee any kind of a considerable sell-off coming in before we resume the upward move?
Yeah, good morning. So I think markets have rallied. I mean, again, in line with we have seen in the global markets, right? So US market has also seen a good rally despite some concerns about further rate hikes from here on. And our markets have been driven again on the back of fairly decent growth outlook. Okay, we have seen a GDP number getting increased and also strong liquidity flows, right? FII flows in the last 2.5 months have been very, very strong. And that's the reason for the market rally. But I think rally has been more broad-based, right? So there are a lot of sectors which are participating in this rally. Unlike, say, in the US, right, where we have seen that the S&P movement is primarily driven by around 6 stocks, the FANGs and then NVIDIA. If you remove that, then the market is not really much up from year till date. So I think that gives a lot of confidence in India's up move, I think, and earnings growth also, if you look at for FY 24, I mean, our expectation is around 15% earnings growth, which is a very strong growth in the context of where the global growth is going to be. So given that, I would say that the markets, while it's risen quite sharply in the last couple of months, there could be some consolidation or even some kind of a mild correction. If at all we see a global correction, I think India would do that. But I really don't see a great reason for any large correction for the market at these levels. Overall fundamentals and the macro situations continue to remain fairly good. And that would continue to support the markets going forward. Also, the valuations, if you look at, they are somewhere, I mean, slightly above the long-term average on a price-to-earnings multiple. On a price-to-book value multiple, they'll be slightly higher. So it's not like the market is very expensive or in a zone which one is to be too worried about. Unlike, say, what it was when it made the earlier peak in September 21, right? In the interim period, we have seen in the 18 months, 19 months, the earnings have grown by almost 25% or so. So, yeah, so while slightly caution over here, but not to be too worried.
All right, time to exercise caution, and of course mild correction is what most experts are penciling in. But a lot of experts I have spoken to have said that it's the market is turning more stock specific. So and as you mentioned that valuations aren't in very expensive zone at the current juncture. So when picking stocks, should one go in for a bottom up approach now? What is the strategy one should look at, Mahesh?
Yeah, so I think while the Nifty movement might not be as much, but in this current environment, I think you're right. I think very difficult to take a call on the market, right? Because where the market will head in the shorter term, it's with a lot of factors which are still there, especially on the global front. So in that scenario, I think a bottom-up approach is more relevant. And there are enough stories in the market, okay, which companies or sectors, okay, which are doing well. And one has to also be careful a bit about valuations, right? We have seen a run-up in a few stocks which have probably because of the liquidity flow, but so they have to also look at valuation. So in that scenario, it boils down to bottom-up ideas where there is reasonable earnings visibility of growth and valuations are not too expensive. So that's where you can make the alpha in your portfolios. So I think that's a strategy I think which we'll continue to adopt rather than bothering too much on the market at this point in time.
Right, Mahesh, in a bull market, it's very important to cut your losses. And, so in that sense, I want to ask you, aside of equities, what are the other avenues one should look at, and what is the ideal portfolio mix one should have at the current juncture?
So I think this year when we came with the outlook, we said that the risk reward across asset classes look to be fairly well balanced. So we've seen that in the debt also, the interest rates have gone up and the yield and the carry there in the funds is fairly reasonable at around 7.5% to 8% or so. And the risk reward on equity also looking at the current valuations and the earnings outlook is also in line with the long-term returns where equity will provide or commensurate to the risk premium, what normally equity should give over the risk-free rate. Historically, that has been around 4.5% above the risk-free rate. And if you look at the 10-year bond yield, which is around 7%, that implies around 11.5% kind of a return, which we think is what the returns the market should give over the medium term. And given that, I think one should be well balanced across asset classes, which includes debt and also probably gold, right, as a hedge, because there is still uncertainty on the global front. We're talking about recession. So in that scenario, and we've seen geopolitical risks are always there. So gold provides a good hedge against that. So if you have a combination of these three asset classes, okay, in your portfolio, I think that can give you a reasonable return, at the same time reduce the volatility. And we have our multi-asset allocation fund, okay, which we had launched around 6 months back, precisely with that objective, where we have seen that historically, if you have a combination of around, say, 65% equity, around 10 to 15% kind of gold, and balance into debt, that gives you returns which are only slightly lower than the broader market return, but reduces the volatility significantly. I think in this market, currently the situation, I think it is important that investors also protect from any kind of uncertainty. And a good diversification, I think, in this criteria, I think, would be critical. Again, this is a typical allocation, but depending on the investor's risk profile, okay, that allocation or the mix could change. But by and large, what we're saying is that your target equity allocation, right, in your portfolio based on a risk profile should be near to the median, okay, what you had decided, right, at the beginning. So we run our Balanced Advantage Fund, which runs the asset allocation model, which is based on around 8 factors, which includes valuations, liquidity, and also momentum and volatility. And that suggests that we should be somewhere around 50%, right? The range is around 20 to 80%. So we are somewhere in the middle level for the equity allocation.
All right, Mahesh, we are running out of time. I want to ask you one last question. Given the kind of trends that are emerging after the first quarter earnings season, of course, Tata Motors yesterday posted very strong numbers. You've IT that has kind of disappointed after Infosys's shocker guidance. So would you be, looking at IT, given the fact that most analysts believe that it's still a buy on dip, and autos, they have run up quite a bit this year. Would you say they are far too expensive right now? And of course, manufacturing as a theme has done well. So what would be that 1 or 2 themes that you would zero in on for the long term now?
Yeah, so in the near term, I think if you look at a lot of these sectors are looking fairly pricing in the near term outlook over there. IT, I think we believe can be a good contra by these levels, though I think there could be 1 or 2 quarters of more of kind of a slowdown. But a lot of the negatives are getting priced in over there. And structurally, we believe that the whole digital transformation, I think, will likely to continue for more years. And that will mean a reasonable, good top-line growth for the IT companies. And the cash flows there are fairly strong. Dividend is now good. So it can be a good, steady returns over there, though, but we don't expect any spectacular growth over there. At the same time, certain sectors where we think structurally we will be positive on our bank financials look fairly good, especially NBFCs now with rate pause. You could see in the margin expansion, and overall credit growth is fairly strong. So that looks to be a good sector, okay, to be in. Apart from that, the whole domestic manufacturing and the capex-led industrial, I think we have seen the investment cycles starting to pick up, and that again can be a good structural story, including in the power sector. Now we are expecting there that the demand-supply situation would probably worsen, and you could see more investments coming in up over there. And from a slightly longer-term perspective, we like the consumer discretionary space, which is currently going through a slowdown. We've seen slightly weak numbers in this quarter, but I think in India, discretionary consumption would increase as a basket of the total consumption, driven by demographics, the young population, premiumization, and urbanization, and that can be a good growth sector to be in from a long-term perspective. And this correction is offering some good entry point in some of these stocks, which are normally very expensive.
All right, those are some of the themes to watch out for in the near term as well as the long term. With that, Mahesh, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us.
Thank you.
Well, let's also, go back to Brijesh and talk about some of the stocks, of course, that will be hogging the limelight in today's session. Starting with Tata Motors, of course, stellar set of numbers. JLR in the driver's seat. We've seen margins come in very strong. JLR revenues up 57% on a YY basis. Debt has been, of course, reduced. And most importantly, DVR shares will be converted to ordinary shares. Now, Tata Motors, as the stock itself has seen a 60% run on a YTD basis. Brijesh, but would you expect some kind of a pop to come in today, given the fact that the street will be digesting not only strong earnings, but of course the news that DVR shares will be converted into ordinary shares? What is your reading on the charts?
So if I look at the Tata Motors, the long-term time frame, so monthly definitely, as you said, it has already rallied 60% kind of setup. But then if it is sum it up to a smaller time frame, then I believe we are still in an uptrend. This 600, 610 was a major breakout from where a huge amount of short covering was seen from the derivatives point of view. So I believe if there is a small correction in the Tata Motors, that should be viewed as a buying opportunity because the momentum somehow is very strong and this decline I don't see below 620, 615 level. So by any reason, if the market corrects and the Tata Motors do also correct closer to 620, 615 level, should be viewed as a buying opportunity because there is a much more upside on the Tata Motors. I wouldn't be surprised if in the coming months we will be crossing 650, 660 on the higher side. So bias remains very strong positive. Declines close to 620, 615 should be viewed as a buying opportunity.
All right, we had a couple of queries on Tata Motors. Hope that answers your query. Vedanta Chakravarti as well as Manish, if I'm not mistaken. Yeah, both of them had queries on Tata Motors. Hope that answers your query. But let's also talk about, some of the brokerages that have come out with reports on Tata Motors. They have pegged targets over 700 rupees for Tata Motors now. In fact, Jefferies has also upgraded the FY24, FY26 EPS estimate by 6 to 8% on this counter. From Tata Motors, let's move on to L&T now. That's the other heavyweight that's in focus, given the fact that earnings are pretty strong on the back of a pickup in execution, although margins were a disappointment. If you look at the brokerage views, Morgan Stanley is overweight with the target price raised to 2850 per share. Of course, the strong execution, it believes, has come as a surprise. And it says that the ask rate for the balance of, the current fiscal, that's a 9-month FY24, appears achievable, and it has revised its FY24 core revenue growth estimate to 18% from 15%. CLSA as well, buy rating target price above 3,000 rupees. Jefferies as well has a target price above 3,050 rupees or thereabouts. The stock had run up a fair bit over the last 5 days ahead of earnings, but yesterday it did come under a bit of selling pressure. Would you say that, we could see, some bit of an uptick in today's session, or do you think it could come under, sell on good news kind of a scenario?
So basically, if I do look at the L&T chart, so there was a gap on the last Friday session. The gap was seen at 45-20 level. So I believe whenever there's a gap, so that gap basically acts as a support zone. So this might act as a support. 25-20 is a trigger. So I think there can be some continuation of the yesterday's follow through selling can be there. So, but then I don't see it below 25. So if there is a possibility, if it comes close to 2,500, that should be viewed as a buying opportunity. And then the higher side remains open because that's the counter is trading in an uptrend. So basically, if we get an opportunity close to 2,500, that should be a very good opportunity to re-enter because the basic weekly and the long-term time frame is still aggressively bullish on the L&T charts.
All right. Of course, I need to mention that the board has approved a 10,000 crore rupee buyback, and the price is at 3,000 rupees, which is of course at a premium to the current price as well. And special dividend of 6 rupees, of course, has been announced as well. But let's take up some queries that are trickling in. This morning, there's a query coming in from Selvan. Wants to know your thoughts on KPIT. Now, mid-cap IT, of course, has fared better compared to the large-cap peers. And if you look at the chart for KPIT Tech, I think it has done fairly well. It's not really opening on my computer right now, but yesterday it was up 0.5% or thereabouts. Stock is trading above that 1,000 rupee mark, inching closer to its 52-week highs. How should one position themselves in some of these mid-cap IT stocks like KPIT Tech? You have the likes of Persistent, Emphasis. What would you advise investors to do after earnings?
Right. So specifically KPIT, I do believe that this mid-cap IT was been the flavor for the last couple of weeks. But then if specifically KPIT is having a major resistance at 1130 mark. So I don't see any aggressive move above 1130. And then whatever the corrections we saw during this in the last couple of last 2 trading sessions with the mark, the KPIT almost came close to 950 levels, has now seen some kind of distribution at the higher level. So I think slight profit booking is on the cards. So directionally 1130 is the resistance zone and there is a probability that it might come close to 900 level. So profit booking should be viewed in the KPIT from the current, maybe from from the next 1 or 2 kind of a month point of view. My view would go wrong if by any chance if it trades and strongly closes above 1150, which is most unlikely at this point of time. So 1130 is the resistance zone. I do expect it to come somewhere close to 900 level. So that would be the view for the KPIT. If we talk of the persistent also, it's like somewhat there is a distribution in the monthly chart. The monthly chart is already down by 6.5%. And as and when it broke 4700, so there is another scope for another 300 to 400 points on the downside. So IT overall, whatever the move which we saw in the mid caps, it's likely to fizzle out at this point of time. Profit booking kind of scenario is more likely. So kind of sideways to negative bias in the mid cap IT as of now.
All right, since you're talking about IT, I think a couple of more queries trickling in. What are your thoughts on Wipro? Prateek Mishra wants to know about Wipro, and I also saw a query coming in on TCS. How are these two looking on the charts now?
Wipro, very clear, this 400, 410 is a multiple resistance zone. It has been consolidating for the last, for the last 1 year, I think it has not moved. Wipro has not started moving. The trigger will come only when it stays above 430 level, which is very unlikely as of now. There are no setups which says that there should be any buying seen in the Wipros. It's more or less avoid. It doesn't promise much on the higher side. 430 is the immediate resistance, so it's a kind of avoid at current price. It doesn't make risk reward ratio. And there's no technical reasoning which says that one should buy Wipro.
All right, that's the view then. Hope that answers your query. Let's take up a query on Suzlon then. Of course, the numbers came out yesterday. The company has reported a profit versus adjusted loss in the same quarter last year. Of course, last year there was an exceptional gain of 2,400 odd crores. Revenues are down 2%. EBITDA margin has also, slipped a bit, 14.7% versus 15.6% on a YOY basis. Now, the stock, of course, has seen a very stellar run. Yesterday, of course, it was under pressure ahead of its earnings, but over the last month itself, it has gained somewhere around 35% or thereabouts. Should one use this dip to accumulate this counter, given the fact that it is, of course, winning orders on a daily basis now almost?
So basically, this being a penny stock, we don't get into this segment. But then, if I ignore the name and I simply look at the chart pattern, then it is bullish. I would not be advising to make any fresh entry, but the traders or the position traders who are holding the position, let's ride the momentum, because as per the Dow theory, the height of high bottom structure is very strongly holding up. So this continuation of the trend will be seen on the higher side. But that doesn't make me believe that I can make some fresh trades in the counter. Hold the position. The momentum can be seen until 25-30 levels. So no fresh entry. Write the position if somebody has it.
All right, that's the view on Suzlon. But let's take up a query on Ambuja Cements as well. Sudhanshu Patel wants to know your views. Of course, yesterday we saw a very smart uptake coming in on this stock. It was up 4.5% or thereabouts. I think a lot of other Adani stocks also saw a fairly good uptake in the second half of the session yesterday. But specifically about Ambuja Cement, what are the levels that you'll be watching out for? Would you say that a reclaim of 500 is on the cards sometime soon?
Before 500, the 200-day moving average is placed at 454. So it has to scale above that 450 zone. So I think if weekly charts do get a close above 450 mark, 455, or maybe 5 points plus or minus. So yeah, I think there is some positive bias in the Ambuja Cement. It looks positive on chart. Yesterday there was technical breakout followed by the volumes. So as and when the 450 mark is taken out on the weekly closing basis, we can talk of 500 on the higher side. So it do look positive on charts.
All right, looks positive on charts. One last query I want to take up on Manali Petrochem. This one is coming in from Abhilash, and he's saying that he's sitting at a loss of 25%, but he wants to know your thoughts for the long term. What should he do, given the fact that the stock is just coming off its 52-week lows and he's making a hefty loss? What would you advise him to do?
So there was a breakdown in the Manali during the month of Jan at the level of 71. So after that, the stock has been trending down. Some amount of buying was seen in the month of April, but again, that entire buying is taken down. And that buying came from the lows of 60 levels. So and now it's almost trading at 64. So doesn't look very much strong if somebody is holding a position at this level, and if 60 is taken down from where the buying actually do came in, then I think one should exit the position. It's wise to take the book the losses at this current price. There is no structural positive in the counter, so I would exit if 60 levels are broken on the lower side. And I don't believe one should average or it's a down 52-week low counter. It may keep moving down in the near future also. So it's an exit. Maximum stop loss would be 60. Definitely exit trade below 60 levels.
All right, that's the call. Hope that answers your query. But with that, we've come to the end of the query segment. But Brijesh, before I let you go, give us some stock recommendations for our viewers this morning.
So there is a slight momentum which I'm seeing in the Manappuram. So Manappuram is trading at 130 levels. So I think somebody want to trade a trading view for the next couple of days can look at the Manappuram. The stop loss would be 125, and I'm betting for 145, 150 on the higher side. So that would be a trading call from the 5 to 7 days kind of time frame. There is a result lined up on 10th of August. We believe the results would be good, and this conservation breakout can be seen in the Manappuram. So that should be one bet. And somebody is looking for a trading opportunity. There was some buying in Titan in yesterday. The Titan was up by 1.5%, and it has seen the reversal from the recent downtick. So there is a trading opportunity at current price. 50-60 points trade can be seen in the Titan purely, and do follow the stop loss. So yesterday's low, which was 29.70, should be the viewed as a stop loss for the Titan, and one can pay for 50-60 points on the higher side. One more pick which I do like is the Bata. Bata is something which is again very strong. It was moving sideways, and again there was a very strong bullish candle close in yesterday's session. The counter was close to 1% positive. We expect the range breakout of the highest at 17,000 is the multiple resistance zone. So chart pattern suggests that in the near, maybe today tomorrow, there could be this range breakout can be seen in the Bata India. So again, a trading opportunity. Bata can be seen close to 1750 levels. So that's a view for this counters.
All right, so Manappuram, Bata and Titan, 3 stock recommendations coming in from Brijesh. With that, Brijesh, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us, and of course answering all of your queries as well. Well, with that, we've come to the end of this edition of Morning Trade, but don't go anywhere, because coming up next is Opening Bell from me and the entire team. Thanks a lot for watching. Stay tuned to Money Control.